I was telling her that I have a very valuable, important guest who has been all over the world, actually. You just came back from your trip to Asia, and you're here. You're the economist right now with Mitsubishi UFJ Securities.
In New York City, yes.
In New York City.
Yes.
Welcome to New York City.
Thank you.
You're in Boston, right?
Back to New York City.
Right now here.
My childhood birthplace.
Wonderful to have you here. I would love to talk to you about your reports. You're sending me these fabulous US Day Ahead reports.
Thank you.
And you've been the best forecaster in terms of the non-farm payrolls, the private payrolls, according to the Bloomberg ratings and exactly. So that's why you're amazing. You're a treasure right now to have. Talk about the treasures, the recent bid in treasury markets. You're saying it reflects several sources. Can you tell us about them?
Okay, so we had it in the summertime. We had a fairly significant sell-off in Treasury yields, and back in early May, we were advising our clients to expect the sell-off because a bunch of things. But principally, we thought the economy was going to do a little better, and we thought the Federal Reserve would have to begin tapering its asset purchase program. So that was
September.
In September. So that was but it didn't happen. So that was our catalyst. September came, a bunch of things changed in the month of September. I mean, not only did we have the Fed did not enact the tapering, not only did that happen, but the only hawk that was in the running for the Fed chairmanship was Larry Summers was removed. So that meant that the Fed would be dovish next year, regardless of whoever they put in.
Is she going to be really dovish? According to some, she might not be as dovish as we might expect her to be. Sorry for
I think that's a good point. But if we look at her track record and we look at her forecasts and we look at the key economic indicators that she focuses on, and when we see her own view of where she sees the Treasury yields and for the Fed funds rate, I mean, she's the most dovish person on the entire committee. So she has only her own personal expectations, just one rate hike between now and end of 2016. Just one rate hike. That's remarkable. The rest of the committee thinks by that point you'll be doing about 100 basis points of tightening. Her own view is only just one. It's a very dovish.
Exactly.
It's extremely dovish. She's extremely dovish. But there's just more than that at work. So we have, so again, it was most likely Janet Yellen will be the next Fed chairperson. That's important. They didn't enact the tapering. We do have all this distress with the government shutdown that's causing, we had GDP growth in the third quarter is a little bit disappointing, maybe 1.5 to 1.75%. That's disappointing. It's clearly below trend. Fourth quarter, we may see another similar type of drag of another quarter of about 1.5 to 2%, which is again pretty soft. And then that sets us up for the first quarter, which is we have to, as a country, we have to get our two parties to come together, work together, deliver a new budget, deliver a hike in the debt limit, in the debt ceiling. We need to do that. And we need to accomplish it by, middle of January, end of January, early February. It's a little bit difficult to do right now, but we need to do that. And then, then we'll see where we are in the second quarter. So that's basically our basis for why we're saying, the Fed's really not going to get clear data until we get to pretty much the second quarter. So we don't see the Fed enacting a tapering in the either the fourth quarter or the first quarter. Most likely, it's going to be in the second quarter.
Good. I want to underline it again, repeat it, and emphasize it, because Bloomberg economists, they are expecting a tapering after the first quarter of 2014.
Exactly.
You're saying it's not going to happen until the second quarter of 2014.
And even that is a little bit of a question mark. And the reason why is because we are seeing a slight deceleration in job growth that makes us a little bit. It's sort of an advance warning. But it's something we're watching very closely over the next several months. We're still looking for a rebound in November, December. But we did notice at the end of the summer, early autumn, that we did get a slight deceleration in the private sector job growth, and that would be unfortunate. And so we're watching it closely, watching carefully. Because if it does, it may suggest that next year's growth might not be as strong as what we're all expecting.
You're saying the stronger employment data for November and December could press Treasury yields higher.
A little bit higher. That's the short-term tactical view, yes.
But how about the non-farm? Right.
The non-farm overall, you know, the total employment is both private sector and the government sector. The government sector was very disrupted by the furloughs in the government shutdown that we just experienced. So for the month of October, it could affect possibly 400,000 workers in the government sector, plus about 40 to 50,000 in the private sector who were furloughed once the government. So it could be a substantial drag on October's report. That's the next report. It comes out in about 2 weeks.
True.
Then we should, you know, all this staff got recalled. So everyone should be recalled. So the November number at the top line number we should go down sharply in October, then rebound sharply in November. But we're going to be looking beneath the surface to see just what the private sector is doing, because the intentions were supposed to be very strong for the private sector in the fourth quarter. You know, the FedExes of the world, the UPSs were supposed to hire and staff a lot for, you know, ahead of the holidays to move the inventory around the country and to move the online sales around the country. That was supposed to happen. All the department stores were supposed to ramp up and hire and add everyone from Macy's to Best Buy to Walmart to, you know, Toys R Us. All of them were supposed to come in and ramp up the staffing. The restaurants, for example, in New York for the holiday parties and all the restaurant and all the tourism that comes here, we were supposed to ramp up hiring as well. So all this was supposed to take place. We saw just a slight, you know, a little kink in the process in September. So we're watching it carefully, but it's our base case. We do get that hiring. We're watching it carefully. If we get it and we get all of it, then we think, you know, next year we're going to be more bullish on the outlook, and we, you know, expect the tapering to occur and expect, you know, the yields to back up. But again, we're watching is, you know, very two-way right now in the economy, so we're watching it closely.
I want to write it down here because I'm going to have you again. What is your number for November and December? We always ask that too.
Oh, so November private sector, we're looking for about 200,000. November, it's like I think it's 201 is the exact number.
Yes, and we have the chart.
And we're looking at 217,000 for the month of December.
And what is your number for the non-farm?
So for the total non-farm in November, it would be something possibly, you know, towards 500 to 550 because of all this swings in the thing.
Yes.
But December, it should be, you know, more or less, if we're 217,000 private sector in December, then I think we're going to be around 210 or 205,000 overall.
These are very high.
These are solid numbers. Very, very solid numbers. They're definitely above the street.
Above the street. You always are the optimistic. But here in your report, you're saying I still need to measure in the fact the cost of the federal government shutdown.
Absolutely.
Let's talk about the federal government shutdown's cost and impact on the GDP, or is it, you know, if you had the invoice, we cannot say it's $300 million a day like they said.
Yeah.
What is your analysis?
I think the thing we have to, you know, we're just overall we're looking for about a, you know, a drag on the federal government between, you know, directly about a quarter of a point. That means 25 basis points.
Shave off from the
GDP, and potentially up from like 25 basis points towards 50. So somewhere in that range. But the thing is, what we noticed was that. You know, it's just the uncertainty of what, you know, where the government is going that's affecting private decisions. It's affecting business decisions to hire, to spend on capital equipment, and it's affecting normal household decisions. You know, I think, you know, we saw some of this in the month of September. Some of the chain store sales were a little bit on the disappointing side. So it just affects. It's unfortunately
the consumption.
And it's not, and when I go overseas, and I have to tell you this, when I travel overseas and I talk to people in either Europe or I talk to people in Asia and South America, they bring me in and they're just saying, what is going on in the government? What is happening? Where are we going? And you know, they can't. Some of their decisions get impacted by this. They sit there and say, you know, if it is the case that the U.S. you know, is going to shut down again, or if they just don't know, they can't get confident to spend and invest. So we see even Asian economies pulling back a little bit in the face of...
Which countries did you visit in Asia that asked you all these questions and they were pessimistic?
They were concerned. They were concerned.
Right.
Everywhere from Tokyo through Hong Kong, Singapore, Kuala Lumpur, Jakarta, Manila, Singapore again. I mean, this is a pretty, you know, this is all from Southeast Asia right through the east, you know, the eastern coast of China, right into Japan, and everyone is concerned about what's going on here.
Can I ask you the same question? Because you said mid-January, and then they said January 31st, and then somewhere I read also February 14th.
Yeah.
All this budget bargains.
Budget bargains.
So-called the budget bargains. What do you expect? Do you think the Democrats and the Republicans will come to an agreement? Because it was so tough. The 11th hour classic.
Yeah,
are we going to live that again?
I don't think we're going to do that.
No.
I think we're in much better shape this time. I think the Republican Party, basically the very top level ranks of the party, very senior, we call them elder statesmen is what we call them. People like James Baker, who used to serve under Ronald Reagan's administration, you know, widely respected person around the world, in America even, both parties. He said, look, he told the Tea Party guys, they have to, like, you know, chill out a little bit, take a step back, and focus on just putting together a smaller package, a shorter term package.